Hey everyone, welcome back to Corporate Decoder. Today we're diving into a proxy statement, which might sound boring, but trust me, there's always a story hidden inside. This one involves a company getting ready for its annual meeting, and we're going to see what's on the agenda, including some votes that could shape its future. Think of it as peeking behind the curtain of a business to see who's calling the shots. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Join us for more chats. We're looking at Binah Capital Group, a company that consolidates retail wealth management businesses. That means they buy up smaller companies that help people manage their money. They own a bunch of different firms with over 1,900 registered individuals. That's a lot of advisors. The main reason for this proxy statement, this report, is so the company can let the owners of the company, the shareholders, know about the annual meeting and what decisions are on the table for them to vote on. Think of it like a town hall meeting, but for a business so they can vote on important topics. The first big item is electing members to the board of directors. It's like choosing the leaders who will guide the company. In this case, they're asking shareholders to vote for David Crane and Joel Marks, who will serve as directors until the annual meeting in 2028. Next, they want shareholders to approve their choice of FGMK LLC as their independent accounting firm for this year. This firm checks their financial numbers to make sure everything is correct. It's like hiring a trustworthy scorekeeper. The company's board is recommending that shareholders vote for both these proposals. That means the people already in charge think these are good moves for the company. They believe David Crane and Joel Marks should be directors and FGMK should be the accounting firm. It also explains some basics like what it means to be a record holder of shares versus holding them in street name. If you own shares directly, you're a record holder, but if your shares are held by a bank or brokerage, you're a beneficial owner with shares in street name. It's like the difference between owning a house outright and having a bank hold the mortgage. You still live there, but there's a middleman. For electing directors, it's about who gets the most votes. For approving the accounting firm, it needs a majority, more than half of the votes cast. Now let's dive into the board itself. The board has several committees like the Audit Committee, Compensation Committee, and Nominating and Corporate Governance Committee. These committees handle different tasks such as checking the financial statements, deciding on pay packages, and finding potential board members. The Audit Committee includes Joel Marks, David Crane, and Daniel Hines. It's their job to make sure the company's financial reporting is accurate and that the outside auditors, the accounting firm, are doing their job right. The Compensation Committee, made up of David Crane and Daniel Hines, figures out how much the executive should be paid. They look at things like company performance and what other similar companies are paying. Finally, the Nominating and Corporate Governance Committee, including David Crane and Joel Marks, finds and recommends people to serve on the board. They want people with the right skills and ethical standards. The committee wants nominees who have achieved something significant in business, education, or public service. They should be smart, experienced, and dedicated to serving the shareholders. The company also has policies in place to prevent insider trading and ensure executives don't profit unfairly from company information. The company also has a clawback policy, which means the company can take back compensation if an executive does something wrong that leads to a restatement of the company's financials. Now let's look at the pay packages of the top executives, which is always interesting. The named executive officers are Craig Gould, the CEO, David Shane, the CFO, Catherine Floughton, president of one of their firms, and previously Michael Nessem, who was the CEO before March of 2024. Here's a quick rundown from the compensation table. In 2024, Craig Gould made a total of $790,600 on Dolly and a bonus of $350,000 he earned commissions and some other compensation. Catherine Floughton made $412,300 and a bonus of $1 and some extra benefits. David Shane made $40,27.83 as Animal Lead $412,500 and a bonus salary and some extra benefits. David Shane made $412,000 salary and some extra benefits. David Shane made $47, he earned some extra dollars and $83. As of now, none of the executives have been granted equity, like stock options. However, they plan to grant stock options and restricted stock units in the future, which will vest over time based on continued service. Craig Gould has a 5-year employment agreement with a base salary of $600,000. He's eligible for a bonus, and the company plans to give him stock options and restricted stock units. If the company fires him without cause, meaning without a good reason, or he resigns for a good reason, he's entitled to a big payout which equals to 3 times his salary plus bonus, and his stock options will vest immediately. David Shane has a 3-year agreement with a $400,000 salary and a guaranteed bonus of $350,000 for 2024. His agreement also includes stock options that vest over time and a payout if he's terminated without cause or resigns for good reason. Catherine Flappin's agreement is with Percy Kaplan Sterling Investments, one of the firms Binah owns. She has a $400,000 salary and can be terminated with or without cause. She can be terminated if unable to provide any services for more than 3 months and gets severance pay if terminated without cause. The independent directors David Crane, Daniel Hines, and Joel Marks each received $60,417 for their service on the board in 2024. The plan is to increase this number. For this year, 2025, the non-employee directors will get $75,000 in cash and $7,500 in option award. Time to find out who owns the company. Craig Gould owns about 1.86% of the company's stock. MHC Securities LLC owns a whopping 54.28%. Wentworth Funding LLC owns 8.21%, and PPD Group LLC owns 8.34%. Kingswood Global Sponsor LLC owns 6.63%. It looks like there were a couple of late filings of forms reporting the initial ownership after a business deal. These forms are meant to be filed sooner. At one point, Craig Gould and MHC had pledged their shares as collateral, something to secure some debt, but this agreement was terminated in connection with refinancing. This sounds risky. If you want to submit something for consideration to a vote, you need to send it into the company before February of next year, 2026. Now, let's zoom out and look at the bigger picture. Binah Capital Group is in the business of buying and building wealth management firms. They are betting on the wealth management market to continue growing, as people need advice on how to handle their money. One of their strengths is the business model. They have a diversified platform. They can serve many advisors with various needs. This could give them an advantage in attracting more advisors and growing their business. One of the weaknesses, however, can be that they are still relatively small compared to some of the giants in the wealth management industry. This makes them more exposed to any downturns in the market, and they need to be very effective at managing the firms that they buy. So that's the high-level overview of this proxy statement. What's your take on Binah Capital Group and the decisions they're putting before shareholders? Drop your thoughts in the comments. If you found this analysis valuable, please hit that like button and subscribe for more corporate deep dives. Don't forget to check out the Discord in the description, and see you next time.